Hi traders, welcome to this live currency strength indicator table video. Coming to you a little bit late today. We was having a good conversation with Charles. We were talking about some of our trades that we'd looked at this week. Charles in particular done really well on a move to the downside on dollar yen. Nice 200 pip move to the downside there, and still long pound CAD. So we're going to touch on those markets today. We're going to have a little look at what's going on across the board as well, because we do have dollar Swiss remaining as our top currency pair to watch from both the trend traders point of view and the day traders point of view. CAD Swiss also still remains on the table as well. Now CAD Swiss has been a good one for us this week. We ended up taking a short position on CAD Swiss, which we ended up taking profits on. That has then also continued to drive lower. So if you did hold that move instead of taking profits at the target, then you would still be in this and be about 100 and 150 pips up in that particular market. So I'm actually going to kick it off with CAD Swiss, and the area we were looking to target was the 66.25, and you can see price has broken down through that level of support now, and we've continued to drive lower. Now if I was to go to our entry criteria, our hourly chart, we ended up taking a short position up at the 66.90 area, and you can see it's around about 150 pips to the good if you're still in this position. Now that we're still got some options here, I'm looking for a particular or another entry into this market, because it's this breakdown of this support has opened up a move potentially down to the next sort of area of lows, which is near that 0.65 handle. So I'm looking to see if price could potentially target that area. Now there's a couple of different options that we could look for this, because price has moved such a long way on this daily chart. I would maybe expect a daily chart pullback, which could bring us into the 66.25 lows for a short opportunity. However, in a market like this, there can be a point where price just runs away, and it can be really difficult to look for an entry point. Now on the 4-hour time frame, we can kind of see there's a little bit of a slot here where we start to see price starting to almost sort of slow down after a big move to the downside. If we go to the hourly, it opens up into this sort of area here where we've got the 65.80 handle is where I'm looking at in particular, which is around this zone there, where you've got kind of like that big push to the downside, and then you've got price slowing down. So is that an area where price could find a little bit of resistance going forward? There is potential for that. Now a 45 pip stop loss does put us in a little bit of danger above at that kind of 66.25 handle. If we were to stretch it to 77 pips, we've at least covered ourselves with that move to the upside. The only problem with that is our risk to reward ratio. We're looking for a 80 pip target. So ideally we want to keep it our stop losses to around 40-45 pips to at least get a 1 to 2 risk reward ratio there. So looking for an entry possibly around 65.80, potentially could see some downside from there. We do have to be aware that it is Friday and there is a lack of momentum. Me and Charles were discussing that there is a bit of a lack of momentum at the moment, but you know, it could start to peak in that US session as they all come online in the next sort of, or well, now and until sort of 1 p.m. they'll be coming online, and then yeah, we expect some kind of potential volatility from that one, but it's how we get in a sort of an entry into that that's worth holding over a weekend. I don't particularly hold trades over a weekend, so for me it's about how do I get involved in that, and you know, it's quite a hard one to get involved with, as well as dollar Swiss. You know, dollar Swiss are top pair to be involved with at the moment. You can see on this hourly chart I've actually created what we call sort of accelerated trend lines here, and you can see every trend line there is just getting steeper, and that's just showing you how aggressive price is moving to the downside there. And if I was to look at it from a 4-hour point of view, again, where would we get involved with that? It's going to be a difficult one to get involved with. So if I just delete all of those there and just go up to the daily time frame, or actually even the weekly time frame on dollar Swiss, and just zoom out a little bit, you can see very aggressive move to the downside. Yes, that opens up a move for us down to the next level of support, which is 82.50. But how do we get on that move? I think it's, again, we need to wait for some kind of retracement phase, maybe 87.75, which was the low that formed here back in January of 2021. That could be a point of interest because we do have a trend line as confluence. So again, I'm just kind of eyeing up to see if we do get some kind of pullback, and if we do, does it then, do we then see that trend continuation from that point? Now, another market that was of interest was Kiwi CAD. Kiwi CAD coming up into a little bit of an interesting area. Now, we did actually go long Kiwi CAD on the 6th of July. We actually came out for about 50 pips of profit. Since then, the market went sideways. Kiwi and CAD both left the tables, and then it came back recently as prices traded to the upside. So will we see some further upside to this market? Now, we do have the daily 200 moving average coming in line with the 50 moving average on the hourly chart. Now, that could be quite interesting as a point of entry. Again, the only problem we have with this, targets are sort of 58 pips away. We need at least a 76 pip stop loss. So negative risk reward, unless we try and target the previous highs in here at 84 or 0 spot 85, because then that would open us up to that sort of larger target. That is if price was to trade through this trend line support, and you can see price has actually been respecting this on multiple occasions. So again, probably want to sit on our hands with Kiwi CAD until we get some kind of more of a definitive entry point. Moving on to some other charts of interest then. So if we have a quick look at dollar yen was a market that Charles capitalized on very well this week. I did not get my entry into this one personally, but Charles was short and above this high here and had about 200 pips target off of that low. I think it's actually this high in here, yeah, around about 200 pips in there. We were looking for pullbacks into these previous lows this week. Just didn't quite happen for us, and price has traded lower. We are back at resistance highs. The problem is we don't have yen on the weak side of the on the strong side, sorry. It's actually on the weak side of our day traders table now, so nothing we can really do about this because they're both on the same side. Both on the same side really for us is a what we'd call a hard exit off of the position. So we were not looking for any kind of position into this now, as yen has appeared on that weak side of the table. So I hope you've enjoyed all the content this week. It's been a bit of a tricky week, but we managed to capitalize on a couple of different moves, and yeah, I look forward to speaking to you next week.